exclusive is the president of the San Francisco Federal Reserve and CEO, Mary Daly. Mary, great to have you.
Thank you so much for having me. Glad to be here.
Thank you so much for being here. So I know you're focused on inflation. You're also have an eye on these jobs numbers. But how would you assess the current backdrop?
So right now I see the incoming information is very positive. You know, the inflation number that printed today, that's good relief for American consumers. They've suffered too much under the burden of high inflation, but it's incomplete picture of what we have to look at as policymakers. We have to look forward, and there are risks.
Well, you're also traveling all around your district. You're meeting with business people and lots of people across the board to get a sense of their sentiments. What are you learning?
You know, I have 9 states in my district, the western United States, and what I'm seeing is people feel bad, they feel worried, they feel uncertain, but they're acting in the same way that they normally do. They're building, they're investing, they're consuming, the planes are full, travel's good. So we're at a point where I'm cautiously optimistic, they're cautiously optimistic.
You know, the president's trade agenda has put some cautiousness out there on the part of businesses because they want clarity.
They do.
And we haven't seen that clarity. What has that meant to those discussions that you're having?
You know, I asked them, did you put pencils down? And what they said is, no, but we put risks away, right? We're not going to take a lot of risks because we want to see how the economy materializes. But if we're doing our regular business, we're still active because the job market is solid. The people want to purchase things, and our businesses are good. So solid, I'd say.
Well, I mean, solid, and yet inflation remains an issue. You've focused on it. Food prices, one certainly issue that has been sticky. What is it going to take to get inflation, particularly on the food level, lower?
You know, inflation is something that has been coming down, but we really want to ensure that it stays sustainably at 2%. It's going to take this ongoing balancing in the economy, and I think some of the uncertainty resolution, which we hope will come along, will take the edge off. Right now, people are deciding, should I buy a lot of things to build up my inventories? That is going to be an increase in demand. Are the supplies going to be there? That's all putting pressure that we'd like to see dissipate, but ultimately we have policy rate in a restrictive place, and that's going to continue to put downward pressure on inflation.
And we've seen oil prices come down. That's got to be a positive.
That is a positive. I mean, food and gas are what people really think about, food, gas, and housing. We're getting relief in some of those things, but again, it's, you know, I don't want to make the mistake that previous committees, you know, think of the 70s made, where you jump to the conclusion that all is well, only to find it resurfaces again. And we really want to deliver this price stability goal.
So the chairman, Jay Powell, was at the White House this week meeting with President Trump. No doubt the issue of rate cuts came up. President Trump has been trying to prod the chairman to cut rates. What do you believe will be the practical and necessary outcome here?
You know, what we have to do is look at the incoming economic information and see how it affects the outlook for the economy. And right now, I see policy in a good place. We're standing center court, if you will, if you're a tennis fan. You're standing center court. We can agilely move one way or another as the data unfolds, but we want to keep the policy rate modestly restrictive for now until we are sure that inflation is going to hit that 2% target.
So you want to wait. Would you expect to see rate cuts at all this year?
You know, I'm still comfortable with the summary of economic projections, which we put out in December and in March, that said 2 rate cuts seemed like a good forecast. Of course, with all the uncertainty, forecasts are, you know, subject to change, essentially. But I feel comfortable with the fundamentals of the economy are moving in a direction where we're back in balance and inflation's coming down. So I'm comfortable with that projection, and I'm going to look forward and take the incoming information and see what materializes.
And as far as the inflation story as it stands today, I mean, how much of an issue is all of this spending? We just spoke with Jody Arrington, and, you know, the chairman of the Budget Committee is trying to get the president's big, beautiful bill out the door. The Senate is now looking at more areas to cut. Do you believe we could ever get back to pre-COVID spending?
You know, I'll leave that to our fiscal policymakers, our elected officials. But ultimately, you know, the thing we know over history is that countries like, you know, businesses and others, you have to take account of your balance. You have to have something that's sustainable. And I think about future generations. We are handing them an unsustainable problem that, you know, we have an opportunity to solve.
Well, I guess what I'm asking is how much of the inflation problem was due to all of the spending?
Well, I'd say that the spending in consumers and all the support that was there. It's not just the support that they got from the government or accommodative monetary policy. It's also the fact that for many, many months, we were locked at home, but still earning money for many people. And you put that together, and people have this pent-up demand that they want to spend. What's been remarkable about the economy is that is pretty much absorbed now, and they're still out there optimistically spending. So I would just say that's part of the American spirit. They get out there, they work, they spend. The labor market's been good, and people are doing this. So I do think that we want to be thoughtful about how much spending we're doing. We have to get it back down in order to sustain the growth, but also keep inflation low. So that's where we're at.
That's what I was saying, I guess, because during COVID, I mean, maybe we went a little overboard. You know, I mean, I know we were in an unprecedented.
History will probably look at us and say, you know, did we accommodate monetary policy? Was it too accommodative for too long? And was the fiscal support too large? But I would point to other countries where the fiscal support was less, and they still had the same problem with inflation because there was a global imbalance.
Mary, it's great to have you.
Thank you so much. Appreciate it.